September 19th, 2023, 3:47 a.m. Istanbul time. The governor of Turkey's central bank receives a phone call that will destroy the lira by morning. Not from a banker, not from an economist, not from the IMF, from the presidential palace. And the message is simple: lower the interest rate, now. Within 6 hours, the lira loses 8% of its value. Billions of dollars evaporate from Turkish savings accounts while people sleep. And this isn't the first time. It's the 47th time in 3 years. Because what's happening to Turkey's currency isn't an accident. It's not bad luck. It's not global markets. It's not even inflation. It's a deliberate strategy that violates every single rule of modern economics. A strategy so reckless that MIT economists literally use it as a textbook example of what never to do. And yet, it keeps happening, over and over and over again. See, most people think Turkey's economic crisis is complicated. They hear about geopolitics, NATO tensions, Syrian refugees, commodity prices. And while those things matter, they're not the core problem. The core problem is devastatingly simple. It's a secret that every central banker in the world knows but will never say out loud. Because if they did, it would expose the most dangerous economic experiment of the 21st century. An experiment that's turned 85 million people into unwilling test subjects. An experiment that's destroying generational wealth in real time. An experiment driven by one man's theory that defies 400 years of economic consensus. And here's what makes it truly terrifying. He's not backing down. He's doubling down. Even as the country burns, even as people's life savings turn to dust, even as Turkey transforms from an emerging market powerhouse into an economic cautionary tale. Because in his mind, he's not wrong. Everyone else is. Every economist, every textbook, every historical precedent, all wrong. And he has the power to prove it, no matter the cost. So let me take you inside the central bank secret that's destroying Turkey. The phone calls that happen in the dead of night, the governors who resign and protest, the economists who've been silenced, and the theory, the absolutely insane theory that's driving it all. Because once you understand what's really happening, you'll realize something chilling. This isn't incompetence. This is ideology meeting absolute power. And it started long before that phone call in September. Let me tell you about a theory so controversial, so fundamentally wrong that it doesn't appear in a single economics textbook anywhere in the world. It's called reverse economics, and it goes like this. High interest rates cause inflation. Low interest rates cure it. Read that again, because it's the exact opposite of everything modern economics teaches. The opposite of what the Federal Reserve does, what the European Central Bank does, what every functional central bank on Earth does. When inflation rises, you raise interest rates to cool the economy. That's Economics 101. That's what Paul Volcker did to save the dollar in the 1980s. That's what every central bank governor learns on day one. Except in Turkey. In Turkey, the president believes the opposite. And the president controls the central bank. His name is Recep Tayyip Erdogan, and he's been firing central bank governors like they're disposable. 4 governors in 4 years, each one dismissed for the same crime, trying to raise interest rates to fight inflation. Because Erdogan genuinely believes, has stated publicly, repeatedly, that high interest rates are the mother and father of all evil. That they cause inflation rather than cure it, that lowering rates will somehow magically stop prices from rising. It's economic madness, and it's been national policy since 2018. But here's what nobody talks about. Why does he believe this? Is he delusional, ignorant, corrupt? The answer is more complicated than you think. Because Erdogan isn't stupid. He's a political survivor who's held power for over 20 decades. He's navigated coups, international crises, and assassination attempts. So why would a man this shrewd cling to an economic theory that's destroying his country? The answer lies in something most people don't know about Turkish politics, something that connects religious ideology, political survival, and economic theory in a way that's absolutely unprecedented. See, in Islamic finance, there's a concept called riba, interest, and it's forbidden. Charging or paying interest is considered sinful in traditional Islamic law. Now, modern Islamic finance has developed workarounds, profit-sharing arrangements, asset-backed instruments, complex structures that avoid explicit interest. But Erdogan comes from a deeply conservative Islamic political tradition, a tradition that sees interest rates not just as economic tools, but as moral evils. And somewhere along the way, he fused this religious conviction with his political power. He convinced himself that his faith-based opposition to interest rates was actually brilliant economics, that the West's obsession with raising rates to fight inflation was a conspiracy to keep Muslim nations poor, that he could prove them all wrong. And when you have that kind of conviction, when you believe you're fighting not just an economic battle, but a moral and religious one, you don't back down. You can't back down. Because backing down would mean admitting you were wrong about everything. Your religion, your economics, your legacy. So instead, you fire every expert who disagrees. You install loyalists who follow orders. You make the phone calls at 3:47 a.m. and you watch your country's currency collapse. But here's the truly insane part. It's not just ideology driving this. There's a political calculation underneath it all. A calculation that makes perfect sense once you understand Turkish electoral politics. And it's this calculation that's turned Turkey into an economic death spiral. Let me show you the political trap that's destroying Turkey. Erdogan's core voting base, the people who keep him in power, are small business owners, shopkeepers, and construction companies. People who borrow money to operate. People who hate high interest rates because it makes loans expensive. And here's the thing, they vote religiously, literally. They turn out in massive numbers, election after election. So Erdogan faces an impossible choice. Raise interest rates to save the currency and immediately anger the people who keep him in office, or keep rates low, destroy the lira, but maintain political support from his base. He chose door number 2, every single time, and he's been selling it to his supporters as economic patriotism. The West wants us to raise rates, he tells them. The IMF wants to control us. The international bankers want to crush Turkish business, but we won't let them. It's populism wrapped in nationalism, wrapped in religious conviction. And it works. His base believes him, even as their savings evaporate, even as the lira crashes from 2 to the dollar in 2014 to over 32 to the dollar today. Even as a country that was once the 17th largest economy in the world watches its currency become worthless. Because Erdogan has convinced them that the pain isn't his fault, it's America's fault, it's Europe's fault, it's the interest rate lobby. Never mind that Turkey's inflation hit 85% in 2022. Never mind that a cup of coffee that cost 5 lira in 2018 now costs 60 lira. Never mind that middle-class Turks have watched their purchasing power vanish. The base stays loyal, and that's all that matters for staying in power. But here's where it gets even darker. Because low interest rates don't just hurt savers, they create a specific kind of economic distortion that benefits a very particular group of people, the people closest to power. Let me explain how this works. When the central bank keeps rates artificially low, it becomes incredibly cheap to borrow money. And who gets the loans? Not ordinary citizens. Government-connected construction companies, pro-Erdogan business empires, political allies. They borrow billions in cheap lira, then they immediately convert it to dollars or euros. They build projects, export goods, stash wealth offshore, and when the lira inevitably crashes, which everyone knows is coming, they pay back their loans in worthless currency. It's the greatest wealth transfer scheme imaginable. The politically connected get rich, the middle class gets destroyed, and Erdogan stays in power. This is why central bank independence matters. This is why every functioning economy separates monetary policy from political control. Because when politicians control the printing press and the interest rate lever, they will always choose short-term political survival over long-term economic health. But Turkey crossed that line years ago. The central bank isn't independent anymore. It's a tool of presidential power, and the consequences are catastrophic. In 2023 alone, over 500,000 Turks applied to emigrate. The brain drain is accelerating. Doctors, engineers, programmers, anyone with marketable skills is fleeing because they can see what's coming. And what's coming is worse than anything Turkey's experienced so far. Because there's a mathematical reality that even Erdogan can't escape. A debt bomb that's about to detonate. And when it does, the lira won't just collapse, it will cease to exist as a functional currency. Here's the number that keeps Turkish economists awake at night. $450 billion. That's how much external debt Turkey owes to foreign creditors. Debt that must be paid back in dollars and euros, not lira. And here's the nightmare scenario that's now unavoidable. When your currency collapses, your debt doesn't shrink, it grows. Think about it. In 2014, when the lira was 2 to the dollar, Turkey's debt payments were manageable. Today, with the lira at 32 to the dollar, those same debt payments cost 16 times more in local currency. The debt burden hasn't stayed the same, it's multiplied. And it's not just government debt. Turkish corporations borrowed heavily in foreign currencies when times were good. Airlines, telecommunications companies, energy firms, they all took out dollar-denominated loans because the interest rates were lower than lira loans. It seemed smart at the time, but now they're trapped. Every time the lira falls, their debt obligations spike. Companies that were profitable are now insolvent. Banks that were stable are now sitting on massive non-performing loans. And the central bank, the institution that's supposed to manage this crisis, is being ordered to make it worse. In March 2024, Turkey's inflation hit 67%. The rational response? Raise interest rates to 50%, maybe 60%, crush demand, stabilize the currency, take the pain. What did Erdogan do? He forced the central bank to cut rates to 8.5%. 8.5% with 67% inflation. Let me put that in perspective. That's a negative real interest rate of negative 58.5%. Money in a Turkish bank account is losing value at nearly 60% per year in real terms. It's financial suicide. And Turkish citizens know it, which is why they've been doing something desperate, something that's creating a parallel economy right under Erdogan's nose. They're abandoning the lira entirely. Walk into any jewelry shop in Istanbul today, and you'll see something remarkable. Gold bars stacked floor to ceiling. Turks are converting every lira they can into gold, dollars, and cryptocurrency. The dollarization of Turkey is happening in real time. Apartment rentals, priced in dollars. Car sales, priced in dollars. Even grocery stores in major cities have started accepting foreign currency. The lira is becoming what economists call a hot potato currency. Nobody wants to hold it for longer than absolutely necessary. You get paid in lira, you immediately convert it, because tomorrow it'll be worth less, and next month even less than that. This is how hyperinflation starts, not with a bang, but with millions of individual decisions to abandon the national currency. Turkey isn't Zimbabwe yet, it's not Venezuela, but it's on the path. And the worst part? Erdogan knows. His advisors know. Every economist in the country knows. But they're powerless to stop it. Because in May 2023, Erdogan won re-election.
Despite the economic catastrophe, despite the inflation, despite everything, he won. And that victory sent a chilling message. He can survive this. The economic cost of economic destruction is lower than he thought, which means he has no incentive to change course. In fact, he's accelerating. Since the election, he's fired 2 more central bank officials who suggested rate hikes. He's appointed loyalists with 0 monetary policy experience. And he's announced a new economic plan that somehow involves even lower interest rates. The insanity isn't stopping. It's intensifying. But here's what nobody's talking about. What happens when this finally breaks? When the debt bomb detonates and Turkey can't pay its creditors? When the lira becomes so worthless that the government can't import food or fuel? When the political stability that Erdogan has maintained through economic destruction finally collapses? Because that moment is coming, and it's closer than anyone thinks.
Picture this. It's 2026. Turkey defaults on its external debt. The IMF refuses to bail them out without conditions Erdogan will never accept. Foreign investors flee completely. The lira hits 100 to the dollar. Supermarkets run out of imported goods because no one will accept Turkish currency for payment. Gas stations close because Turkey can't afford to import oil. And then the unthinkable happens. The military steps in. Not violently, not through a coup, but through a constitutional intervention to restore economic order. Sound far-fetched? It's happened 4 times in Turkish history. Every time the pattern was the same: economic crisis, political instability, military intervention. Turkey's military sees itself as the guardian of the secular republic, and when civilian leadership drives the country off a cliff, they've historically stepped in. Erdogan knows this history. It's why he spent 20 years purging the military of potential opponents. It's why he survived the 2016 coup attempt. But here's the thing about economic collapse. It creates chaos that even a loyal military can't ignore. When soldiers' salaries become worthless, when their families can't afford food, when the entire country is on the brink of starvation, loyalty becomes negotiable. And that's when everything changes. But there's another scenario, one that's perhaps even more likely. Turkey doesn't collapse catastrophically, it just fades. It becomes a permanent economic invalid. A country of 85 million people trapped in perpetual crisis, high inflation forever, currency controls forever, capital flight forever. A lost generation that never experiences economic stability. Young Turks who graduate university and immediately start planning their escape. A brain drain so severe that Turkey becomes economically irrelevant, not destroyed in a single crisis, but hollowed out over decades. This is what happens when ideology trumps reality, when a leader surrounds himself with yes-men, when political survival becomes more important than national survival. Turkey had everything going for it: a young population, strategic location, manufacturing capacity, tourism, agriculture. It should be thriving. Instead, it's collapsing in slow motion. All because one man refuses to admit he's wrong. All because he's fused his ego with an economic theory that doesn't work. All because he's convinced himself that everyone else is the problem. And here's the truly tragic part. This didn't have to happen. In 2019, Turkey could have stopped this. Appointed an independent central bank governor, raised rates, taken the pain. It would have been brutal. A recession, political backlash, but it would have worked. The lira would have stabilized, inflation would have dropped, confidence would have returned. Turkey would have suffered for 2 years and recovered. Instead, Erdogan chose the path of denial. And now, 5 years later, the damage is irreversible. You can't restore trust in a currency that's collapsed 16-fold. You can't bring back the investors who've been burned repeatedly. You can't unteach an entire population to abandon their national currency. The social contract is broken, and once that's broken, it takes generations to rebuild. So what's the lesson here? Because Turkey's story isn't just about one country, it's a warning. A warning about what happens when central bank independence dies. A warning about populist economics. A warning about leaders who believe their own propaganda. We're seeing echoes of this everywhere.
Politicians around the world demanding that central banks print more money and keep rates low. Leaders who attack their central banks for raising rates during inflation. Movements that claim economic expertise is elitist and that common sense should guide monetary policy. Turkey is the endpoint of that road. It's what happens when you let politics consume economics, when you prioritize short-term popularity over long-term stability, when you believe that economic laws can be bent through force of will. They can't. Reality always wins. The only question is how much you destroy before you admit it. And in Turkey's case, the answer is everything. The central bank secret isn't complicated. It's not hidden in obscure data or classified documents. It's hiding in plain sight. A president who controls monetary policy, a theory that contradicts all evidence, and a country paying the price for one man's refusal to accept reality. That's the secret, and it's destroying 85 million lives, while the world watches and does nothing. Because Turkey's collapse is a lesson the world needs to learn, but refuses to see until it happens to them.